The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now up 109. Nasdaq's down 15. S&Ps are up 1. Gold contract down $19, trading $19.93 an ounce. You get silver down 23 cents, $27.85 an ounce. Light sweet crude down 43 cents, $42.46 a barrel. Get the numbers out this morning at 10:30 inside the oil market. Notes and bonds. You get the 10-year up 3 ticks right now, 139.16. The 30-year up 10 at 179.04, and King Dollar just can't hold price. Busted through its lows yesterday with conviction, folks. We're at 92.274. King Dollar's on its way to 88. The euro is at 119 on its way to 124. The yen is at 105 on its way to 101. And the British pound's at 132 on its way to 145. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, if you haven't watched the program yet, outstanding program every trading day, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, futures. Great program. Check it out. Kevin Hinks, what's going on?
Good morning, Tom O'Brien. You know, you just made a statement that's pretty significant, and that is the U.S. dollar is under pressure right now. I think that 92.5 level was pretty important that it didn't hold yesterday. So I'm watching the U.S. dollar. You know, normally that buoys, a weaker dollar buoys all the commodities, right? So you really watch the commodity space. But gold is a little different story. Gold's its own microeconomic story right now. So you can't just necessarily say that it'll automatically go up with a lower dollar like most commodities will. But so it's worth watching today as it plays out for sure.
Well, you know what's going to be so interesting, Kevin and folks, is that so when you look at the dollar on a long-term deal, you know, the bottom line is that 88, you know, actually when you look at it on a long-term deal, the dollar has traded, you know, between really 85 to 87, 88 is a normal, like I brought it back 50 years, Kevin, okay?
Yeah.
So that's not the end of the world, folks, okay? The thing that's intriguing here is that the Fed, you know, so we're going to get the Fed minutes today at 2. Yeah. We know that they're pumping money like beyond belief, okay? That's a given. What is going to be intriguing is come September. They leaked this out Monday. Yeah, today's Wednesday. That they've been doing this study, and what they're going to try to do is basically explain to all of us, number one, how they think they can get inflation to 2% and they want to push it more. So this is going to be intriguing when that study comes out, man. Because it's like, okay, it wasn't supposed to be out to September, but it's like, you know what? This is the first for the Fed. That they're going to try to explain that, number one, they want to push it. Number two, why they want to push it. So, you know, we'll see how this shakes out. But I think the aspect of, you know, these soft commodities, man, I think they're going up, man. I mean, that's the bottom line. So we'll see, you know.
I mean, it's certainly worth watching, right? I mean, the real question is, we know what our Economics 101 book and trading commodities tells us: lower dollar, higher commodity.
Right.
The question is this the same? Is this trading environment that we're in now the same as the other ones where you can count on that relationship? Because, you know, let's face it, gold went up as the dollar went up in the last couple of months. But you're exactly right. Two things. The trading range normally for the U.S. dollar is considerably lower than it has been for the last 12 to 18 months.
Yep.
And that's not necessarily a bad thing for U.S. multinationals. Everyone thinks a lower dollar is like unpatriotic. Hold on a minute. Make sure you understand what that means. A lower dollar is better for our U.S. companies. So, you know, this is not the worst thing in the world that the U.S. dollar is coming off its crazy high levels.
Right, and because when you take a look at the euro and take a look at the pound, well, they've been going down for basically 13 years. Right. So it's about time you got a little reversal here, man.
And Brexit, let's face it, Brexit put some uncertainty into that currency and held it down even more.
Yes. Hey, so let's talk a little. I mean, the bottom line. I heard that you were out there at Target with about 5 carts, man.
I'll tell you what, these retailers, the good news is they're booming and the numbers are big. The bad news is what it's taken away from, which is the small mom and pop retailers. But it's also the stocks have run a long way. Now, Target is one that may have had some room still in it. But remember, if you notice our show that we did on Monday, the focus was Walmart and Home Depot.
Yep.
And how their numbers were going to be gaudy, but that doesn't necessarily mean the stock's going to go up when those numbers come up.
Right.
And that's what we planned for, and that's what happened on Monday.
Yeah. And, when you look back, folks, okay, what's going to be intriguing here, Kevin, I think, is that if you remember, now I'm going back a long time, folks. I'm going back 20, 25 years. That was the first iteration of putting basically smaller businesses out of business. That's when, the Home Depots of the world started opening up. Well, it's actually more than that. That's 35 years ago. But the bottom line, I'm really looking, Kevin, I'm saying to myself, this is actually a shame because it looks to me like what has happened is that you are going to have 5 or 6 monsters getting much bigger. You're still going to have the same pot of money, your money, our money, all the listeners' money going in, but it's going into 5 companies instead of 300,
Absolutely.
Yeah. And
what's really going to be the fatality in this new economy is the small business. And that's what is getting hurt. That's what needs the government to help them more. And, all these industries that demand, people being close to each other and small, there's a big part of this economy that really needs assistance. And I think it's small business. Obviously, it's airlines and cruise lines and hotels.
Yes.
All of these businesses are the ones that are going to show, we talk on the show a lot about stickiness for, companies that are doing better and holding on to something. Well, the opposite of that is what their numbers are coming in at lower levels. Although we got pretty good news out of Southwest today that their cash burn is starting to go down.
Yeah,
at a
and you have,
than we thought.
United Airlines, we got a big pop out here this morning. That's up by $2.50. $2.25. And what that's all about, folks, is that they just opened up more routes from San Francisco to Shanghai. Right. So there's no doubt that there's got to be more bread put into those, particularly those businesses that we're talking about. I don't know about the cruise line, but the airlines are definitely, that I would say foundation-wise, man, that is part of national security, man. Yeah,
absolutely right. And you can make a case, you can make a great argument about cruise lines, but you can't make an argument about airlines.
Right.
Airlines have to be helped and maintained.
Right.
100%, not even thinking about it. And if you think about it, that all leads into where, Tom? That all leads into Boeing, right?
Yeah.
And Boeing is not only the big maker of aircraft, but it's also a huge defense contractor.
Big time. Yeah, big time. Listen, folks, right here, 45 minutes from now, you want to understand how to set up these strategies and types of moves that we're getting up here, folks. This is Kevin's most wonderful time of the year. Let me tell you something. Some of these moves, man, they're basically, either up or they've been up big. That's the bottom line. Have a great one, Kevin. Look forward to the program.
Thanks for having me, Tom.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 112, Nasdaq's down 1, S&Ps are up 2, and I want to show you something here, folks. We've been talking about this. You actually want to wrap your head around this in a big way, though, particularly if you're trading intraday inside of the futures. And what you're looking at is this. What I've done is this: I put a chart up of Apple, and I've compared it. Now, this is intraday, a 10-minute intraday chart. And what you're looking at there is that you get a chart of Apple with the chart overlaid of the S&P 500 futures as well as the Nasdaq futures. And you're going to see it's quite clear that Apple is running the market. So if you're trading out here, if you're trading this, particularly in the futures market, I would absolutely put Apple up. Bottom line, where Apple goes, the market's going to go. This is the weighting structure is so it's out of whack, meaning that it's so strong inside the NDX 100 as well as the S&P 500, but it can give you an edge, man. That's the real bottom line, and you got to see it's tick for tick, man. You know, bottom line, this market will not go down unless Apple goes down. When Apple does go down, it's going to be dramatic, because what I've been watching this for about a week and a half right now on a 10-minute basis, and what has happened is this: Apple only has to go down like 4 points, and the NQs get destroyed. The S&Ps with 4 points go down to about 12 points, like in about a heartbeat. So you want to keep your eye on Apple as to where that baby's going. And right now, the bottom line is that each and every morning, they're out there buying Apple. There's no two ways about that. The bottom line is that, we closed out here yesterday at 462. You're at 466.17. Is the volume contracting? Yes, it is contracting, but the bottom line, you get the gist of it. Higher Apple, higher markets. Let's go take a look at the whisper number inside the oil market out here. We have, let's see. So we got crude oil inventories. So we're going to be there. The whisper number is a draw of 3.1 million. The survey number is 2.8 million. Okay, let me bring this over and see what this contract looks like. So right now you got oil trading at 42.42. Look at this. This is, man, the oil's looking like the bond market. It's just been a sideways move. Oh, I see. Okay, I'm going to go for more than, because what's happening is this. You do have a spike on the 5th of August. Other than that, every day we're having a contraction. I got to make sure I get the active contract here. Yeah, it's the active contract. Okay, so I'm going back into the whisper number. We are going to go, let's see. So that would be the whisper number. Oh, 1 second. Oh, there it is. Crude. Okay, so the whisper number is a draw of 3.1. The survey is a draw of 2.8. The bottom line is that I'm going to put, yeah, I think they're getting greedy. I'm going to put a build of 1.4. That's just the opposite way. So that's telling me, well, what I'm speculating on here is that you're going to get a build instead of a draw. So we'll see where that baby shakes out. Some of the higher volume equities out here today, let's take a look at them. You got Johnson & Johnson is buying Momentum Pharmaceutical. That's up. That's the biggest one. That's up $21, trading at 50. Where is it? Just over $50. You have American Airlines is up 50 cents. You get Target, that's the monster one. That's up $16. That's unbelievable. TJX, just the opposite. That's down $4. You have Delta is up 99 cents. You get Apple up 3.68. Boeing is up $1.50. And still, let's go just look inside. It's Biomound that's still hitting this NDX. NDX right now, though, is only down 11. And that, of course, if we just go back over to Apple, man, this is what it is. And Apple's holding tight. There's no two ways about that. We go take a look at the Dow Industrials. Dow Industrials is in the green right now. Putting it in the green, you have Apple. What else? Apple's putting 25 positive points, Goldman 23, Nike 12, Boeing 11. Taken away from it, Walmart -9, Microsoft -6, Chevron -4, and you get McDonald's -2. We go over and we take a look at Amazon. What you're looking at Amazon right now is that Amazon is laying at all-time highs. The all-time high in Amazon is at 33.44. We've hit 33.15. I suspect that's going to get whacked because you went up higher yesterday. You did it with volume. What has happened with Amazon, folks, is that Bezos, this is one of these deals that, you know, you have a company that is accelerating on market share in a huge way. You also have, in major cities right now, particularly New York City, real estate, commercial real estate that has gone down very quickly. In fact, it's very hard to price it out. Amazon, guess what? What they did first is that you had the aspect of when we hit COVID, the plane business went down dramatically. What does Amazon do? Amazon bought, I believe, 7 or 8 monster planes. What are they doing now? They bought the GM building they bought. Let me see this. In New York, that's going to be ready on, let's see, where are you? I don't have it right in front of me now. But the bottom line is that what Amazon has been on a shopping spree inside of major cities out there, particularly in New York City. And they expect that, guess what, if they use it 2 years from now, the bottom line is that they're buying things, I suspect right now, probably 75 cents on the dollar. And, you know, the bottom line is that in those major cities, they're going to have a huge presence when, in fact, this COVID is over and somewhat gets back to normal, meaning inside of that office structure. We got to take a look at Google. Google out here right now, that is trading at a price point of $15.56. That's still at highs. Microsoft, we go take a look at Microsoft out here. Microsoft is at $2.10. Netflix, NFLX, they're all bottom line. They're all hanging up here, man. Netflix is at $3, down $3, trading at $4.88. But the bottom line is that they are not pulling back whatsoever. If anything, you can see inside of the NDX, this thing is clawing its way higher once again. We get into the gold market. We take a look at gold. What you have with gold, this is a nice setup, folks. So what we're doing is this. When you come down as hard as we came down last week, you have to build cause. What building cause is, folks, is this, is that you are chipping away at the resistance on the way down. And we got this thing in spades, man. The bottom line is that you came down with 565,000 contracts. Then you tested that area with 460. That's what you needed. So in order to go higher, the bottom line, you need to test the lows. Then what do we get? The bottom line, you get a little expansion of volume, 350,000. Yesterday we got a nice one, 363. What you're doing is going sideways here today, building cause to get up into this last high, which is the 2,089. And my take is that we're on our way to 2,700. And that's going to be all about the dollar, folks. This dollar is going south in a big way. Stay right there, folks. Come right back with those oil numbers.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had a drought. Inventories fell 1.63 million barrels. You had the gasoline falling 3.32 million barrels. So the bottom line is that the survey number as well as the whisper number was pretty close. We take a look at some of these oil equities out here. If we do ExxonMobil, we take a look at ExxonMobil. Right now, still trading down 5 cents. No big deal. 42.38. Chevron. We take a look at Chevron. You get Chevron here. Yeah, trading down 75 cents. So the bottom line is that we do get a draw going, and we'll see how that affects the oil market. Bottom line is that if that thing can't, well, actually, it came in on what the market was expecting. So it doesn't necessarily have to also go topside. That's how this basically shakes out. Dow Industrials right now are up $1.14. You get the NASDAQ. That just went positive. That's up 12. S&P's up 4. NDX 100. And there it is. Here, I got to put this up again because you're really going to wrap your head around this, man. Apple, bottom line, is driving it. Apple, look at this. Apple's up 496. And I'll set this up so you can see this as we set it up, how you can see this works. So I'm going to take Apple first, and I'll take the NQs. I'll put the NQs on there. And then on top of that, I'm going to update that chart. And you can see it's quite clear how this works. And then I'm going to put the E-minis on top of this ESU. So you'll see they're all there she is. So you can see as Apple drives higher, bottom line, they're driving those indices higher. And I remember this happening like a long time ago, and I'm trying to remember what the equity was. I know when we were in the 90s, folks, is that before the crash in 2000, what had happened from approximately, it was about 96 to 98, even 99, that's when you had the OEX. And the OEX, folks, was the S&P 100 option market, and it was an insane market, and a lot of people traded it. And that is when, actually 94 is when day trading actually really started in a big way. And what would end up happening, what was running the market then was Sun Micro, Dell, Microsoft, and Cisco. Those 4 stocks, if you can move those 4 stocks, you can move that NDX 100. And there was a huge amount of pushing around those 4 stocks at the close each and every day to actually push around the OEX 100. And that's the last time that I remember that you could actually take a look at individual equities and really push the market. And bottom line, that's what you have right here. You just imagine, you can imagine a fund, I'm doing this just as the aspect of sight and, just looking at markets and say, okay, man, and understanding the weighting structure that's inside there. Imagine with a fund with the data that they have, how simultaneously they can just go in and push Apple, whether up or down, and simultaneously get the trade on the other side, because that's where the bread is also. In fact, if we go take a look, and you could do that because of the fact that the weighting structure is so large, but also because of the fact that you're talking about penny wide inside of the option market. Like right now, we get the Qs trading at 278.25, and if we go to the 278s, you can see that your bid offer in the 278s is basically 2 to 3 pennies. So you can come into that market with large liquidity and get out with large liquidity. And so the aspect is that as they line that trade up, what they'll end up doing first is that they'll decide which way they want to go with it. Then they decide they come into the options market. And then, of course, what you do is you just goose the actual equity market simultaneously. That gooses the option market. All above gooses the S&Ps or the NASDAQ 100, whatever you're dealing with out here. GDX, let's go take a look at the GDX out here. So inside the gold market we have with the GDX right now. This is a nice setup. Same thing. The bottom line is you're pulling back today. You get, let's see, we get 4.9 million right now. You're pulling back into big numbers. So what I expect you're going to see a pullback. You're going to have a lighter volume on the pullback, and that maybe is also building cause for higher price. We go take a look at Barrick Gold, and Barrick is the poster child right now, folks, no doubt. And Barrick's in an ABC structure on the way up. That's how this is shaking out. Didn't hold price when it got all the publicity out here. We got to a higher high yesterday, pull back, but you have ABC structure up. Like say the B point is 30. Yeah, the A is 22, so you get $8. The C is 25, so you're talking about 33. A to B equals C to D. And we take a look at this, and your next swing point up there is 37. So when you do look at Apple is, not Apple, oh my God, Barrick. Barrick is looking to get into that 37 mark. We're going to take dollars up a bit. If we go take a look at the euro, when you're going to see this, and we got our man Teddy Kagestack coming up at 40 past the hour, which is pretty cool, because we'll walk with him through the euro and the other currencies. What you can see out here is that this was a decisive break topside, man. EUR, come on, baby. There we go. So what we had out here yesterday, Monday rather. Yeah, no, it was yesterday. You broke this high with conviction. Conviction, folks, is a wide price spread. Normally, I want volume behind the move, but inside of the currency markets, you don't have volume because there's so many different places to trade it. But you can see that you had the decisive break, and you had the break after you had been building cause for almost 2.5 weeks. That is setting up, saying, okay, your next leg up there is 125. My take is that we're actually going to go to 140. And when you do take this and you put this on a longer term basis, what you are going to see here is that from the price point of the 140 level, I believe, from the 139.93, that was a decisive break of the downtrend that has been in place since the year 2014. Now, the downtrend has been in place since 2008. We're talking 12 years that downtrend's been in place. Bottom line, a change of trend. My take is that, we do have a change of trend happening, and we'll see just what that is going to do to the markets in general. What does happen, is no doubt about it, is that as you do have, and there goes the NDX 100 into the positive, and there goes Apple. Apple's at 534. When you started the program, folks, you were at 394. So Apple just put $1.25 into it. That's all it takes, by the way. Now you want to keep your head wrapped around that, because the reality is that at some point someone's going to unload Apple, and the bottom line is that the market, you'll be scratching your head. And you'll see other stocks up, and it'll be like Apple's down, and it's like, well, why is the NQs down so dramatically and the S&P down so dramatically when the market itself is basically looking like it's holding up? Dow Industrials right now up 104, Nasdaq's up 20, S&Ps are up 5.5. Stay right there, folks. We got our man Teddy Kagestack coming back. We're going to be talking currencies.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now trading up 98. NASDAQ is up 9. S&Ps are up 4. Let's go over to our man, Mr. Teddy Cakes, as we do each and every Wednesday at 40 past the hour. Folks, you can reach Teddy every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakes, what's going on, brother?
Oh, it's a crazy day in the currencies already shaping up. The dollar was under pressure, and now it's getting a little bit of relief as we talk right now.
Yes. Yeah, so let's, where do you want to start?
Well, I think that obviously the dollar's been smashing new lows for the dollar index, but we have some interesting situations that are kind of brewing right now. For the first time, we are starting to see some divergence with the major currencies. Now, in the past few days, they've been basically trading in tandem because the dollar had gotten a little relief over the past week going into Sunday, Monday. And now the dollar bears are back. So the pound, the euro obviously have been pushing new highs. The Canada has been pushing new highs against the dollar as well. Interestingly enough, though, the yen, it made a low a couple weeks back, and it made a higher move low off of this recent rally. So and also when you look at the Australian dollar and the New Zealand dollar, and this is where I'm getting at with the divergences.
Okay.
Your European currencies have been trading in tandem, with meaning that they've been strong versus the dollar. Okay, and in the short run, all of the currencies have been doing it over a couple of days. But if you look at over the past week, you have higher move highs and higher move lows in some, but you have the opposite happening in a couple other ones. Meaning that while the yen, like I said, stamped its low a week and a half ago, the New Zealand dollar also had made its high a few weeks ago, whereas the Australian dollar continues to make a newer move high against the dollar. Okay, so when those three currencies as a trade zone were trading against the dollar, we're starting to see that New Zealand is not having the strength that it had, and neither is the yen. Okay, so it's kind of like we're going to have a little hiccup, I think, now with the currencies, because we've been talking about interest rates, how there hasn't been very much mobility, like there's the dog wagging the tail or is the tail wagging the dog.
Sure.
I was listening, you talk about Apple in the stock market, and it's very reminiscent of different periods. Like when you mentioned the 90s, like that was part of the dot-com bubble, was between those few stocks running the whole market,
right.
And there was obviously fraud at that time as well. And then we also had the same thing happen again in 2008 in the banking sector, and there was the same situation where overbuying and then bad paper and what have you. And I think that we're kind of coming into the realization of this right now as well with the currencies, because the coronavirus trade is off the table, okay? But look at what big money is doing. Obviously, you've seen the swings in gold over the past week and a half, okay? The dollar got some strength because the interest rate market, the 30-year, finally had a little bit of a break a week and a half ago. And that was the first real correction that in pressing support, meaning the bond prices were going down, yields are going up. And that was the first time there was actually an interest rate trade. Now, we all know what the Fed's stance is right now. So right now, if the rates go down, you're going to buy those dips. Okay, so that was the first time we've had an interest rate trade. And now in the past couple of days, the dollar's taking a beating again. What's happening to interest rates? The bond market's rallying. Okay, the short terms haven't really done very much. Okay, there's no trade there. There's no liquidity. There's no volume. Those are just locked on their highs, meaning that's why the 30-year snaps back. And that's giving us this little volatility. Okay, so what that means is that as the bond markets rally back up to the high, the 30-year that is, I think the dollar is going to remain under pressure, and just like gold is getting that bounce again too, so as gold rallies up towards its highs and tries to challenge that level again, interest rates are going to hit their ceiling. And until that buffers at that ceiling, I think you're going to see the dollar have weakness against most of the major currencies. But you may have to be careful, though, like I said, the Europeans, they're staying very strong together, like with what they're going up and going down. They're basically at the same harbor, okay? And think of it like that. Whereas the Asians are not, that's a trading zone. You have New Zealand, it now has a little bit of a coronavirus thing, what have you. I don't think that that's the trade that's happening. But if you look at the banking sector about what's happened over the past week especially, you've had a big sell-off in bank stocks too globally. Warren Buffett, when he does things, people watch and listen, So he basically is starting to get out of a lot of bank stocks, except for a couple.
That was a big number, right? Yeah.
What's that?
That was a big deal, man.
Well, it is.
He's going big into Bank of America, but him selling the rest of those bank stocks, including Goldman Sachs, he sold it all. That's pretty intense,
And that gets right to what you just said right there was what I was going to get to, is the Bank of America thing. Bank of America owns Merrill Lynch. Their trading platform is exploding over the past few months.
Yeah.
Okay. Now, what's happened over the past few months? You have a lot of people that are at home day trading. We talked about this a few weeks ago, how all these kids that were into cryptos, now all of a sudden they're trading stocks and options. The numbers came out last week. It's astronomical. They've had like 30-40% growth in new accounts at brokerage houses across the board in this country.
Right.
Okay. So you compile this thing with money coming in. Where's big money? If Warren Buffett is buying the bank stocks that own brokerage houses, that's because their revenue is coming off of trading. It's not coming off of making loans right now.
Right.
It also means he got out of Chase and Citibank and a couple other ones. You know why? Because they hold the paper on their loans. They don't just package and bundle it and sell it off into the open market. They actually own a bunch of this stuff.
Right.
So if foreclosures are going up right now, no one's talking about that because new home sales and new home construction is exploding right now, And there's also inflation coming in there because of all the wanton destruction in certain cities. That's why Home Depot is going up. Plywood is going up in price. Certain building things are driving up the price of new construction as well.
I'll give you just an idea. I build a lot of houses, folks. And the bottom line is that, lumber, it's by the car, meaning a full railroad car. But, we just went from $273 to $771. So what we've seen is that, let's say if we're spending $100, now we're spending like $138 on that. It's been that dramatic the last actually 4 weeks, so. That's going to get priced into the building because the bottom line is that there's nothing you can do about that if you're building.
And that's going to affect the currency markets in a very big way because as inflation starts to kick in, you're going to have the stress. It's going to hit the interest rate market eventually. We're going to have another banking situation. I'm not calling for a panic in a bubble or what have you. That's not what I'm saying. But these tensions with what's going on right now, it's going to snap. But until that happens, the dollar bears are going to keep on pushing. But I think you have to watch the interest rates because remember for a while I said that trade is off the table.
Right.
So it's not the carry trade, but it's when you see an opportunity like that, when the bonds do sell off and all of a sudden, the yields start to increase, that's when you have to look for when that goes, that's when you'll see the dollar bulls come back in for small little corrections, But otherwise,
it's going to be wild watching. Looking at those currencies, the euro and the pound has been in a downtrend for 12 years, man.
But the euro on a monthly basis is breaking out to the upside.
Oh no! That's my point. I think we got a total change of trend. We'll see.
Sure.
But that's my point more than anything. It's like, okay, man, and there's nothing. That's normal. 12 years, like, give me a break, man. Do you know what I mean? It's like, okay,
right.
Right.
Yeah. And that's politics aside too. This has nothing to do with any of that.
Right. You know what I mean?
So, which is nice.
The quickest way to make money is don't pay attention to politics, man.
Yes,
in the marketplace.
Exactly.
There's no doubt. Folks, you can check out Teddy every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Always a pleasure, Teddy. Appreciate the great
Thanks,
education.
guys.
Look forward to
Stay bearish
speaking.
the dollar.
Yeah. Oh, yeah. Wow.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at Apple. So at 10:51, and we're 10:54, folks. You get it. Apple did hit $2 trillion a market cap. Now, as I'm showing it right here, it's 1.998.1. Bottom line, it did hit there at. Here, I'll bring this up so you can see it. It hit 468.09, and right now you're at 467.41. So, $2 trillion. Just think of that for a second. Pretty amazing, right? And when you take a look at this, of course, let's pull this back, because what you're going to see, so all I got to do is 220, 230. Let me see where it was 230. So watch this, folks. Okay, this is crazy. At 230, it reached 230 on the week, the month of October of 2019. So October 2019, where are we at? Okay, so within a year, it booked in another $1 trillion market cap. That was the week that it made $1 trillion. Bottom line now going exponential. And what has happened, by the way, when you take a look at Apple, this is exponential now, meaning you cannot sustain this type of move, meaning it's a parallel move up topside in a big way. The first move wasn't that bad. The first move that we're talking about from January of 2018 all the way up to February of 2020. That was a good 45-degree level. We're at a 60-degree level on the way up from the March lows. You get a 60-degree level, you don't hold 60-degree levels, folks. Bottom, and by the way, it doesn't mean that it can't go up another $100, but you don't hold a 60-degree levels. That's a parabolic move, and it never ends well. Stay right there, folks. We can think of swim coming up next. That I'm at Mr. Bells, the Chapman, Steve Rose, Dave White. I'll be back this afternoon. Dow is up by 92. Nasdaq's up 10. S&P's up 4. Stay right there, folks. Got our man Kevin Hinks and his team coming right up.